Hey everybody, testing 1 2 3, testing 1 2 3. Let's do a quick audiovisual check if you don't mind. Type a D in the chat. Type a capital D in the chat if you can hear me and see my screen. Type a D in the chat if you can hear me and see my screen, please. All right, how's everybody doing today? Looking good. Thank you, Sandra, Raven, Christy, Deanna, Norman, in. All right. Oops. All right, folks, we're going to get started in just a second here. All right, folks, working on my slides here. We'll be back in about 30 seconds, and we're going to go ahead and get started. Excited to present to you today, and go ahead and get cozy, relaxed. I'll be back in about 30 seconds. All right, guys, let's go ahead and get started. I'm back. Hopefully everybody can see my screen and hear me loud and clear. I made an adjustment to my mic for those that said the audio was low. First off, I want to say welcome. You are here to see top tools for catching corrections in major moves, and I will actually show it to you. I'll actually show you proof, show you the full strategy, nothing held back. I'm very excited about this, very proud of this strategy. It's actually nothing secretive, nothing top secret. Nothing really proprietary about it. It's something that works, something that I use each and every day. Intraday trading, swing trading, longer term position type trading. So I think by the end of the presentation, you will actually have a strategy that you can apply immediately. We're talking about later today, even tomorrow in the early session or in the late night session, whatever time frame you're trading, whatever session, it can be applied regardless. So first off, I do want to say welcome again. I appreciate everybody's time, your commitment to be here today. I know everybody has a lot of things that they could be doing right now, whether that's working, spending time with the family, just maxing and relaxing, whatever it is you are doing or wanted to do, you're here today, and that shows that you are committed to take your trading to the next level. So I appreciate that. I value your time. We're going to be together for about 60 minutes or so. We're going to get through all of the meat of the presentation, ask all of the questions that you wish. I'm not ignoring them, but I want to make sure we get through the entire presentation, get through the meat, teach you the strategy, and then I'll go back, answer everybody's questions. We'll look at symbols, look at how what I'm going to show you performed in today's market environment. So let's go ahead and get started here. We must always begin by utilizing the risk disclaimer as required by the governing bodies and our attorneys who require us to share. Past performance is not necessarily indicative of future results or substantial risk of loss associated with trading. Only risk capital should be used to trade. Trading in general is not suitable for everybody. You can't lose money. So what this means is go trade with your rent money, your mortgage money, your child's educational funds, your milk money, and so on. Trading is risky. You can lose more than what you put into your account. Now, we want to shut everything down. Again, remove all distractions. That means closing browser tabs, logging out of Facebook, putting your phone on mute. We're going to be together again for about 60 minutes. We are recording. I can't guarantee there'll be a replay, so you want to make sure to pay attention and listen closely. Ask all of your questions so you make sure that they get answered before we leave today. Before we begin, let me formally introduce myself. Don't think I told you who I was, in case you don't know. My name is Silas Peters. I'm the founder, head trader of Seasonal Swing Trader. This is me with my family. Simply put, I'm a husband, father, son. Just love to hang out with the family, whether it be at the beach, on a boat, hiking, on the golf course. I spend a lot of time working, a lot of time in front of the screens. So I like to get outside when I can and enjoy the great outdoors. So I just want to show you, prove to you, I'm not a robot. I'm a real human being like all of you, or maybe most of you, and just like hanging out and chilling whenever I get the chance to do so. And we'll point out, I got a lot of flack here for this attempt to grow a mustache, but hey, you know, it's winter time. You got to do what you got to do to stay warm. But how did I get here? How did I get to where I have the privilege of speaking to you today? Well, in college, and no, I didn't put this here because I just like Alabama. This is actually my alma mater, University of Alabama, Tuscaloosa. While here, I majored in investment finance and economics, but I had no idea where that was going to send or land me. Had no clue. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. And we were playing one day and we were just chatting, and he was asking me what I was going to do. Again, had no idea, thought, you know, high finance sounded great, but I had literally no idea where I was going to end up. So he started telling me about his background, his backdrop, his experience in Chicago, his experience on the floor, trading and this and that. I was immediately intrigued. I was enamored. So what I started doing research when I got back home, started doing research on Chicago, the trading floors, the pits, all the commodities, everything related to trading. And I was pretty much hooked. So what happened after that? Well, needless to say, I was a bit green on the sleeve. I sold my car 3 days after graduation, rented a U-Haul, and I drove straight north to my new digs in downtown Chicago. Signed a lease here for a 23rd floor unit of Marina City, the old honeycomb towers here. If you haven't seen them in person, I can almost guarantee you have seen it on some type of movie. They're in a lot of movies, backdrop for several movies, so it's pretty cool to say that that's where I live. This balcony right here was larger than my entire studio unit, but a really, really amazing place to live, overlooking the Chicago River right here. Smith & Walensky Steakhouse down here. Don't worry, I couldn't even afford a water there at the time. Had House of Blues literally underneath the building right here that I could just go down, take an elevator into. Harry Carey's behind me. A lot of exciting stuff going on. And actually on the same day I moved in, I took the U-Haul truck back to its depot. I hopped on an Amtrak and I scalped a couple tickets to the US Open at Olympia Fields in Kohler, Wisconsin, to chase Tiger and Phil around. So I was lucky enough to score some tickets there for the Saturday, Sunday weekend event. I was a little nervous on my first quote unquote trade of while I was in Chicago. I bought the tickets. The guy disappeared faster than I could say US Open. So that's a little bit about that. But back to my journey, or my career path, if you will. My first career until this, and I want you to picture this. I was working the Asian, European, and early New York session trade desk. Well, if you remember me telling you I sold my car, this picture right here could literally be me walking to work at some time around 6 p.m., 2 a.m. If I got off early, maybe 5 a.m., 6 a.m. I remember on numerous occasions me walking down the middle of LaSalle Street, nobody but me and a snowblower in the entire city of Chicago, walking down LaSalle, looking up at the Board of Trade and the God of Grains series, who this little guy right here is, entire city of Chicago. Me getting into the Board of Trade and the temperature reading a solid negative something degrees. Now, I am from deep south. I'm on the Gulf Coast, Gulf of Mexico, Mobile Bay, and I'm used to humidity, not used to Chicago winters. So when I got in and it was reading teens, 20s, I mean, that was like a heat streak, heat wave, if you will. So I did this right here for a few years, handling some serious trade size across the Board of Trade, the Merck, NIBOT, NYMEX, various London and Asian exchanges, trading for our hedge fund, as well as banks and CTAs, everything from corn to copper to hogs, euro dollars, Japanese government bonds. Incredible learning experience, both with the markets and trading, as well as the Chicago big city life. But I decided to head back south when some other opportunities opened up. And that's when I like to call that I went truly corporate. I went from a fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life, managing equity and fixed income portfolios and other investment management roles in this glass building right here. To me, this was extremely boring, but it was the safe route. But I missed the action and the excitement of the pits, the tape, the screens. So through some additional contacts, I was led to a day trading firm where I helped run operations, execution, trading education right here, to running a couple of futures brokerage firms, and then ultimately working in a private family office serving ultra high net worth individuals, doing a little bit of this right here, primarily investment related situation, but a little bit of all this right here. So it's safe to say I'm seeing a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading, the trading world, me sitting in an office tied to a desk, looking out the window, and of course, dealing with the typical corporate red tape was just not in my blood. I wanted to get back to the markets, to the charts, to the trading. I'm not a sit around the water cooler, shoot the breeze type of person. I was still trading during this time, but I missed being in the weeds of the market, following the charts, doing the analysis, and so on. So I left the corporate world and I started Seasonal Swing Trader. It's here where I publish research, ideas, and analysis to my followers each and every day, and it holds myself and our community accountable. But during this entire journey, certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I learned that I was not a trading god. I was not above the market. The market did not care what my position was. And damn sure didn't care about my opinion or what I thought it should do. So what did that mean? Well, it meant blowing accounts, emotional trading, acting like a gunslinger, poor risk management. These are all battle scars. And in this workshop, I'm going to attempt to help you think smart, think logical, with a proven price action strategy and plan, so you can avoid the many mistakes that I, and I am sure several of you have made or are currently making today. But why are you here? Let's talk about you. You're here to have a reliable pattern for all market conditions, have a strategy for all asset classes, and to be agnostic of market bias. In today's markets, it's imperative that we have a strategy that can trade both ways. We want or need to employ strategies that can profit during up markets, down markets, and sideways markets, and do all of this without guessing. So today, I'm going to show you a pattern that results in trend reversals, show you the point where a trend is likely to reverse, and show you a pattern with the least risk and highest reward. So if all that sounds great and you're ready to get started, let's get to it. And not only are you going to learn a strategy that's only low risk, high reward, but it all works in all markets, time frames, asset classes, and so on. I don't want to sit here and teach you a strategy that only works on a 1-minute Bitcoin chart or a weekly Facebook chart or a 4-hour crude chart. I want to show you a simple and straightforward strategy that works in any market condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol. I don't care if you're a tick trader, scalper, day trader, swing trader, position trader, if you trade the underlying, call spreads, debit spreads, credit spreads, reverse, crashing tiger, hidden dragons. I don't really care. What I'm going to show you is powerful, and I'm going to prove it to you. But before we continue, it's important now we cover the process. So has anybody here heard of Jesse Livermore? Anybody heard of Jesse Livermore? Not, encourage you to go look up and read Reminiscence of a Stock Operator if you ever get the chance to do so. This is a classic book that is on probably most traders' bookshelves, or it should be at least. But a question I often receive is, what do you think about the markets here? And my typical response is, I don't know and I don't care. And I fully realize that sounds maybe harsh, maybe it sounds ill-informed, especially when you're asked by your friends, your family members, or your in-laws looking for your advice, but it's true. Most part, I really don't care about the daily news that flow in and out of the market. Of course, we want to be cognizant of important news events and things that are happening around the globe. But I'm a trader that trades strategies based off probabilities. So we want to forget about the market assumptions and only focus and trade with high probability strategies and what is actually in front of us. This means no more guessing. And we must realize that knowing what is going on in the news and knowing how to make money consistently are two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what we think the market is going to do tomorrow. And I realize it's a difficult concept for maybe new traders to understand, or even seasoned traders or investors. I even struggle with this. I want to form my own opinion. It's just human nature. And it took me several years to figure that out, because it doesn't pay for me or us to try to absorb every financial story out there or slap every indicator onto a chart. All I care about is when the markets I'm following reach key criteria. But there is one more trait, because if we allow probabilities and not talking heads to define our next move, we need to possess and control one more trait, and that is patience. Because we as traders, or smart traders, know that trade should never be forced, because a forced trade is not a statistically sound trade. We are in this for the long game, and patience is expected if you wish to bring in profits over the long term. Now, I know that may sound boring to you aggressive traders out there, but I'm more interested in the profitable trades, not trying to be a short-term hero who tries to trade every scenario out there. I'm confident in trades that consist of key criteria that are setting up. We're talking about extremely high probability trades. But patience is that key ingredient to the success of the strategy, and really all strategies that you may wish to employ. So what is a high probability strategy? It's one that requires patience coupled with a disciplined approach, waiting for the appropriate scenario to unfold with a high probability of success. It also recognizes that opportunities are made up easier than losses. So we let a few pass us by. We don't dwell on what could have been. There's always going to be more opportunities around the corner. And then lastly, I realize that the less I trade, the better my strategy will likely perform over the long term. And the long term is what matters. And this likelihood is what makes this high probability strategy unique and successful. But in the end, it's all about patience. You've got to exercise patience, again, whether you use this strategy or really any strategies. So, Silas, what indicators do you use? What is the secret sauce? What are the ingredients? Aside from patience, we'll talk about those. Now, I learned early on to keep it simple. We need to really pick a couple of indicators and try to follow them. And I can't tell you how many traders I know want to follow Donchian channels, market profile, GAN, Bollinger Bands, fib retracements. The list goes on and on. There's nothing wrong with that. But this high probability strategy uses price action alone, plus one very free and common basic indicator, along with a couple pro tips to take advantage of sentiment and technical extremes. So who here has seen Jerry Maguire? Everybody seen Jerry Maguire? I'm sure you have. Love it or hate it, this is a famous line. I can't show you the money. I'm not going to jump on my desk and tell you to show me the money. I don't know how you trade, but I will show you the opportunity. So is everybody ready to see the opportunity? Perfect. It's divergence. Wow. Brand new concept, right? Who here has heard of divergence? Now, I'll get a little bit of some smart Alex in here that say, oh, I know divergence. I haven't seen any yet, but I would not be surprised somebody say, hey, I know what divergence is. This is nothing new. It's subjective, blah, blah, blah. That's fine. If that's your thought, your opinion, I would challenge you to stay through the rest of the presentation to show you the secret sauce that we apply to trade divergence. So those of you that are not familiar, let's do a quick recap here or summary. Divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence warns us that the current price trend may be weakening and in some cases may lead to price changing direction. So basically, it's when we have an indicator and price action being in disagreement, using any relevant indicator such as MACD, RSI, etc. It's an indication of a reversal or continuation, but more often a reversal. The details can occur between the price of an asset, almost any technical or fundamental indicator or data. It's typically used by traders when the price is moving in the opposite direction of a technical indicator. Positive divergence occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? It's the earliest indication of a reversal. A good sign to exit can be a good sign to scale. It means that we're usually buying near the bottom or selling near the top. Hint, hint, this means that the risk on our trades are very small relative to our potential reward. Now we have classic or sometimes called regular divergences, both bullish and bearish. Bullish is when price action makes a flat bottom or lower low, but a higher high on the a higher low in the oscillator. Bearish divergence is when price action makes a flat top or higher high and a lower high on the oscillator. Traders use divergence to assess the underlying momentum on the price of an asset and for assessing the likelihood of a reversal. So if the market's making new highs, but the RSI is making lower highs, this warns us that the price of the uptrend may be weakening. This is what we call negative divergence. Positive divergence is the opposite situation. Imagine the price of your stock making new lows while the RSI makes higher lows with each swing in the stock price. Traders would then conclude that lower lows in the price are losing their downward momentum and a trend reversal may soon follow. We also have bullish and bearish hidden divergences. Hidden bullish is when price action makes a higher low but lower lows on the oscillator, and that's what we normally see in an uptrend. Hidden bullish is telling us that the oscillator is recharging to go back up again, or is a continuation of an uptrend. Hidden bearish is when price action makes higher lows and higher highs on the oscillator, and that's what we normally see in a downtrend. Hidden bearish tells us that the oscillator is creating space to go back down again, or is a continuation of a downtrend. Let's talk about regular divergence. This is an example of regular bullish divergence. It's the most frequent and usually considered a sign of a reversal. So when the price is making lower lows, but the oscillator is making higher lows, we have the bullish divergence. Now, we don't need a series of lower lows. We only need one low to be lower than the previous low. And this can typically be found near bottoms. Hidden bullish is a trend following type if the price is making higher lows, low, higher, low, but the oscillator is making lower lows, low, lower, low. This can be seen when the price is in an uptrend and indicates that the price may tend to go up higher. Regular bearish is the most frequent, considered a sign of a trend reversal. When the price is making higher highs, high, higher, high, the oscillator is making lower highs, high, lower, high, can typically be found near tops. Hidden bearish is a trend following type when the price is making lower highs, but the oscillator is making higher highs. This can typically be seen when the price is in a downtrend and indicates that the price may continue its downtrend. Let's talk about identifying trend strength and consider the following scheme here. At point 1, buyers believe that the trend has recovered or a new trend has begun, and they want to make money. So what do? They open long positions, they start buying the market, and they're driving price higher. The trend accelerates as more and more buyers are jumping into the market. When the buyers at point 2, buyers are starting to take profits, the trend starts to weaken. Buyers still dominate, but they calm down a bit because they're afraid that the trend is coming to an end. And then at 3, there's no more buyers in the market. The trend is likely to reverse. The sellers step in, they sell the market, they push, they begin to dominate over the buyers, and we have that trend reversal. Now, we can use tools to help recognize trend and trend strength, and one of those can be found with the popular RSI indicator. I believe the standard rule of thumb is when the RSI rises above 70, but the market's considered to be overbought. When the RSI falls below 30, the market's considered to be oversold. It's a great concept, but we will use the RSI indicator in a slightly different way. Let's look at the same chart. There's 2 significant highs labeled A and B on the price chart. And in the corresponding highs in the RSI window pane, we have the A and B. Price chart, we see that B is higher than A, means the price is still going higher. In the RSI pane below, it's just the opposite. B is lower than A. It means that the trend has weakened and it's likely going to reverse. And lo and behold, what happened? The market actually sold off, reversed, and sold off in droves. Now, we've used the RSI indicator in the previous example, but it can be replaced with any momentum indicator such as CCI, stochastic, MACD. All of these indicators are derived from price, so there's really no better or no worse indicator. It's really about preference. It doesn't matter what indicator is your best friend. All approaches are good, but we want to get back and focus on what matters, and that is the concept of divergence. Before we take a deeper dive, let's quickly recap for context. Bullish divergence is when price makes 2 significant lows, but the second is lower. And RSI is making 2 significant lows, but the second is higher. Bearish divergence is when the price makes 2 significant highs, but the second is lower. RSI makes 2 significant highs, but the second is lower. Now, we previously defined divergence as a discrepancy between price and indicator movement. Note now we've added the MACD to the chart. So when the price makes a new low, but the MACD makes a higher low, it's a bullish divergence, signaling that the trend is likely to reverse. This is classic or regular divergence. The black line on the price is sloping down, black line on the MACD is sloping up. Now, the depth of the divergence is a bit more of a subjective term. When you look at this example, we see 2 div patterns, a bullish and a bearish. The first one is nice, but the second one does not look as promising because the 2 peaks or troughs on the MACD are not as significant. We consider a divergence to be deep if the MACD crosses the 0 line. Such a divergence provides a much stronger signal for a trend reversal. Now, on this chart, we see 2 div patterns. The first example is almost a double bottom, if you will, but the second example has more defined peaking action. When we peak, the MACD line crosses below the 0 line, rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the 0 line, this means that is a higher quality divergence pattern. So now we've seen the basics of divergence. Let's look at ways that we can approach divergence in a smart and methodical manner. We've discovered, or we're learning, that these patterns can lead to consolidation, corrections, or full trend reversals. And that's great, but we need a definitive plan about where to enter, where to place stops, and where to exit. because with this strategy, we can make quick profits on small corrections or minor trend reversals, or try and capture major market moves. And when the trend reverses, it's really every trader's goal to try and stay with the trend for as long as possible. And since we know it's a reliable pattern, let's talk about ways that this pattern is viewed. Sometimes chart pattern traders see a double top. Elliott wave traders may see a shortened fifth wave, but they all refer to the same thing, the divergence pattern. This is what chart pattern traders see. This is what Elliott wave traders see, and this is what we see. Most traders don't realize that the MACD or RSI divergence is exactly what they're looking for. Our approach removes the subjectivity because the divergence pattern is well defined. So now let's talk about entry. The first is entry. Where or how do we even enter these types of trades? So there's a couple different ways we can consider entries, and that is a simple enter on next candle open. We wait for the divergence candle to close, and we enter on the next bar or candle open. Now, another method is to wait for a candlestick confirmation. That is to wait for a bearish candlestick, either an engulfing or some type of reversal pattern for short positions, or a bullish candle or bullish engulfing reversal to open up long or buy positions. So we talked about entry. We need to talk about the least fun or exciting aspect of trading, but by far the most important, and that is stop loss or risk management. Now, there are dozens of ways or arguments about where the best place is for a stop loss, but we want to keep things simple and objective. So for a stop loss with this strategy, we can place it just below the bullish divergence pattern for a long, or just above the bearish divergence pattern for a short. And we'll want to use a buffer with this concept, but we'll talk about this later in more examples. In this example here, we can see that the second turning point, or the point of divergence, can act as a minor resistance point from which price uses to retrace, and we are thus protected from being stopped out too soon. So we've covered entry, we've covered stop losses, and now let's get to the fun part of trading, and that is profit targets. Now, our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon here, so we don't want to place the first profit target too far. I found that a wise place to place our profit targets are at significant areas of support or resistance, or what I like to call price structure. This keeps us from guessing an arbitrary amount of ticks or points. The divergence valley is a good place for profit taking. Notice we have very clear price structure at these levels, and price more often than not gravitates toward these areas just like a magnet. Now, it's no coincidence that prices have reactions at these levels. So by taking profits here, we can now profit from div patterns that result in minor trend changes or corrections. And we can make consistent profits based purely on this exit technique alone. But divergence, as we know, can lead to complete trend reversals, and we want to take advantage of these trends that can occur, which we'll cover in just a bit. Candles. We have a candlestick reversal pattern or an opposite div pattern. That can also be a good place to exit. These are important reversal pattern areas that can signal the trend may likely reverse or at a bare minimum pause. And we don't want to be caught on a full retracement back to our entry, or even worse, our stop out level. So if we get a candlestick reversal that appears close to our first take profit levels, but our order was not filled or our objective was not met, then we want to simply close half of our position or a third or 2/3 and not wait until price reaches that full take profit level. And this can be better illustrated in this next example. So here we can see price, here's where we're long. Price lurched all the way up to the valley area, but put in a bearish reversal candle right near the take profit level. Retraced a bit, came back to that level a second time, reversed again, this time drifting all the way to the stop out area. So that's why it's usually a good idea to consider closing part of our position here and not getting greedy, holding out for those last few inches of profit. Another great way to trade a strategy is by adding a couple of moving averages to the chart. Here I've added the 8 EMA, which is the green fast line, and the 34 EMA, which is the red or the slow EMA. And the first look at this example shows that a candlestick pattern reversal was simply a solid place to exit right here. And I'm not complaining about this. We got short here, first profit targets here. I'm not complaining about getting reversing or getting stopped out right here, but there's much room for improvement. When we add that 834, we may have been stopped out from our shorts by this candle correction, but the trade continues. When the price bounces from the slow EMA, which is the red one, we have a chance to re-enter the market and continue to ride the trade lower into profit, all while following or stair-stepping our stops above swing highs along the way until we get stopped out or the EMA's cross, or however you're managing the balance of your position. Now, so kind of recap here, the most popular approach among traders to exit is to exit a certain number of ticks or points or pips. But that is really the wrong way, because we know that every market and every time frame has different volatility. So it really makes no sense to go for an arbitrary 100 pips or 5 points or $7 and so on, because volatility changes over time. And it changes over time for each instrument. So the best way to determine our exit points is, well, you can test a strategy and learn that individual's market movement or rhythm. You really going to do that across dozens, hundreds of instruments and time frames? Probably not. There's a much easier, less subjective way. So let's recap one more time. First one is just structure, targeting good old-fashioned plain vanilla structure, valleys and dips at significant areas of support and resistance. The next is candlestick analysis. That's if we have candlestick reversals, important candlestick patterns, our order was not filled, we might consider exiting partial position, and then you can exit the balance at the MA crossover or however you choose to manage your position. Now, let's talk about false divergences. How do we filter false divergences? Because they certainly do happen. We know that when traders are trying to jump into a trend, they typically want some confirmation. And we know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when we have minor support or resistance that is broken. Now, there's nothing wrong with this, but with this approach, the entry can be too far away from the start of the move and the risk can be too high when compared to profit. So this is where we are getting in looking to take profit as opposed to getting in here. This is where we're looking to get in and taking profit as opposed to getting in here. Our goal is to limit risk. So we don't say that this entry technique is wrong, but there's a better way to achieve more consistent profits, because again, where most traders are looking to enter, we are looking to take a quick profit. Now, I also want to show you that sometimes the MACD histogram can look choppy, quickly reversing up and down, implying that the market is in chop zone. This can generate a long series of false divergent signals. Notice we are in chop zone. The market's choppy. Chop zone. The market's choppy. Chop, trend, chop, trend, chop, trend. So those of you out there looking for some holy grail chop zone indicator or chop index, this is all you need. It's free. It's free on most, not most, I would say almost every platform. If you don't have MACD, then you need to get a different charting platform. But that's all you need to determine if the market is in chop zone or not. But to prevent over trading, I found a way to recognize clear divergence patterns. So our gold rule says that the signal line must be crossed by 2 peaks. Look at chart 1 on the left. We see how the signal line crossed below the 0 line and then came back up to the second peak. Look at chart 2 on the right. There's no crossing of the 0 line. So this is our higher quality pattern. And now back to entries. So remember, excuse me, our goal is to enter as soon as possible after the div pattern is formed. So our strategy, very simply, gives a signal just after the MACD hook, or what I call the turning point. Only after that MACD hook is formed, you'll recognize the second peak in the MACD histogram. And this is where we recommend to enter on the next candlestick open. A very simple, very mechanical rule. But I've fine-tuned this into what I think is an even more reliable method, and that's by using basic trend line analysis. So when we're looking for a long signal, we draw a simple trend line on the chart by connecting the minor highs. We place a buy stop or just above the trend line. When looking for a short signal, we draw a trend line on the chart by connecting the minor lows. We place a sell stop just below the trend line. When the price breaks the trend line, we're in. This entry is very similar to the same, to the quick entry on next candlestick open concept, but it sometimes protects us from the false MACD hook when the MACD turns again and continues to fall. So perhaps it's a bit more discretionary, but I find it the most effective way to enter on these types of signals. And here's another example, but this time on the sell side, we place a small trend line on the chart, place a sell stop or to get in, to enter, or wait for the confirmation retest of that trend line break, and we're in the trade. So let's recap everything you've learned. You've learned a high probability reversal strategy, where to enter, where to place risk, where to take profits, and how to filter false setups. But how do pros trade it? Have you ever wondered why the market turns against you when you jump on a promising looking trend? Because the most tempting signal is probably a trap. As there are no more buyers to move the market, the sellers step in and dominate. As there are no more sellers to move the market, the buyers dominate. But divergence masters know how to enter in the opposite direction just before a trend turns. And that leads me to this quote. It's a quote I love. Disregard the majority opinion is probably wrong. So yes, following the herd may work sometime. Think of the 90s tech bubble, worked until it didn't. The 2000s real estate boom worked until it didn't. Crypto mania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Of course you do. That's what we want to do. That is our objective of traders. And when you trade this way, your winning batting average could be sub 50%. Yes, you do not have to be right 50% of the time, even 40% of the time, when your risk to reward is overwhelmingly skewed in your favor. But here are some additional pearls of wisdom. The less you trade, the more likely of success you're going to have. You want to filter the unreliable patterns and focus only on the strongest signals. You want to use a customizable indicator that can deal with this for you, where all the process of recognizing these patterns on the chart are done for you automatically. We sit back and enjoy the various exit levels and find out what suits our trading style the best. But how do you do all of it? You can certainly scout for quick profits on the lower time frames, or swing or position trade on the longer time frames. You can trade as many stocks, futures, currencies, cryptos, ETFs, whatever instruments you wish, but you have to be patient. You have to avoid over trading, because patience pays. But how? Silas, there's too many markets, too many time frames. I don't have enough time. And believe me, if anybody understands that, I do. So I'm with you. I'm in that boat each and every day. But we developed a time-saving solution so that traders could live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, scrutinizing hundreds of charts, trying to determine if what they are eyeballing is actually divergence or not. We've now cracked the code and simplified the process. But how? So who here is ready to stand out from the crowd? Who here is ready to trade like a professional and treat trading like the business it is? I'm gonna take a swig of water here. Let me see who is ready. All right, Jack, GT, Becca, of course you are. I'm not gonna name all your names, but yes, I appreciate it. Of course you are. Otherwise, you probably wouldn't be here. So I'm pleased to introduce Divergence Dominator Pro. It's because it's time to automate. What is Divergence Dominator Pro? Well, it's a fully complete, comprehensive trading business in a box solution. So let me quickly guide you through what the DD Pro package is so you can see it immediately and how it can benefit your trading. What all do you get? But sir, what is it? Great question. I'm glad you asked. First, you're going to get the turning point identifier indicator, what I call the TPI. Don't worry, I'm going to show you what all this is. You're going to get the DD Pro scanner, price action pro trading course, candlestick pattern recognizer guide, cheat sheet, DD Pro trade journal, and the TPI fast slow line cheat sheet. But the TPI indicator, what is this magic? Well, it's an indicator that auto plots divergent setups, scanning the market to locate turning points across multiple markets and multiple time frames. So who here can see the TPI in action? You can now, in seconds, pull up your favorite chart, attach the TPI indicator, and bam. Here's the TPI indicator in action on a daily chart of IBM. You see our bullish divergence line with a bullish TPI signal, bearish divergence line, bearish TPI signal. Here is a daily chart of the US yen, bullish divergence signal, bullish TPI signal, bearish TPI, bearish TPI signal, bullish TPI signal, bearish TPI signal. Here is a 5-minute chart of the pound. Can everybody see this? Might be a little bit hard to see on the slides. Bullish TPI signal, bearish TPI signal. Everybody see that? But what platforms? What platforms this is available on? How about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4? Here's what it looks like on Thinkorswim. You see the bearish TPI signal, TPI sell signals here, bullish TPI buy signals, bullish TPI signals. Here's what it looks like on TradeStation, bullish TPI signal, bearish TPI signal. Here are our bullish TPI signal, bearish TPI signal, bullish TPI signals, bearish TPI signal. TradingView, bearish TPI sell signal, bullish TPI buy signal, bearish TPI sell signal. And then MetaTrader, here's your bearish TPI, bullish TPI right here, and bullish TPI. But we don't want to have to locate these manually. If you've been trading for any length of time, you already know that manually identifying divergences are very difficult and time consuming, especially when you're analyzing multiple markets and time frames. And that's where the TPI comes into play. It automatically detects the highest probability divergence patterns for us with a click of a button. We've had the scanner built out for TradeStation, NinjaTrader 8, and Thinkorswim. Combined, the TPI indicator scanner is capable of identifying these patterns for us across all asset classes, all time frames, all chart types for scalpers, day traders, swing traders, and more. But aside from the indicator scanner, I really feel like the crown jewel of this package is my Price Action Pro trading course. This is a never before released course. You're going to get immediate access to a 10-part on-demand video course with all of the following components right here. This is my only full step A to Z training course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, completely removing the uncertainty, all by trading in conjunction with the TPI indicator. So if you're ready to quit guessing, feel confident about your entries, remove emotions, begin to think like a professional, scale your reward versus risk, and have a plan, then that is what the Price Action Pro trading course does. Again, like I said earlier, this is no secret. Divergence has been around, used for years, decades, but now not only do you get a first of its kind tool, an indicator that locates these high probability turning points on your behalf, the Price Action Pro addresses and deals with each of these things here in detail. This is a limited on-demand course. You're also going to get the Candlestick Pattern Recognizer Guide. This is not your grandma's guide to candlesticks. We all know that there are dozens of candlestick formations or patterns out there. This guide is short and sweet and only covers the most important candle patterns that we should focus on. You're also going to get the Divergence cheat sheet. Another incredible bonus is part of this package. This is great for those like written descriptions and summaries, but can also accompany all of video modules. You're going to learn about regular and hidden, exaggerated, the differences between each, and much more. So here is the Divergence Dominator Pro package. You're going to get the TPI identifier indicator, the scanner, the candlestick guide, the Divergence cheat sheet, the DDI Pro trade journal, and much more. But what is all this worth to you? What is all this worth for you? DDI Pro does all of the hard work for you. If you're now able to profit in any market conditions, you can now anticipate major market reversals and turning points. What if you could trade on your time, scalp, day, swing, or position, and you now had all the tools, a scanner, an indicator, and the videos and training guides? DD Pro does all of the hard work for you. But it's important that we determine whether or not this is a fit. If you like scalping on nanosecond charts from dusk till dawn, if you love to be stressed out all the time and carry a heart monitor, if you get a thrill of blowing out accounts over and over again, you have a gambling mindset, don't have a clue where the market's likely headed, it's just a coin flip away, I'm sorry, this is probably not for you. And that's just being completely honest. We can part ways. I wish you the best of luck in your trading journey, but it's probably not for you. But if you're ready to think like a professional trader, you're ready to remove that gambling mindset, you're ready to get serious and trading like a business that it is, and you're ready to kick your emotions and have confidence, that's the key, have confidence in your trading decisions, then this could be for you. And if it is for you, I have a very special offer for today's workshop attendees. That's the Divergence Dominator Pro package. The TPI indicators alone cost over $2,000 to develop. The scanner for the 3 platforms, TradeStation, Ninja, and Thinkorswim, another $1,500 plus. The Price Action Pro course, the cheat sheets and guides bring the total value to $4,427. But I'm very proud of this indicator, the Price Action course, all of the other educational material. I really want to get this out to those that are serious, those that are tired of kicking tires, those that are sick of jumping from system to system, those that are ready to take action and see real results in their account. We're not going to charge $4,427. We're not going to charge $3,000, $2,000, or even $997. As part of this live webinar special, very pleased to offer this to the first 15 signups, the first 15, a single one-time fee of $397. It's a one-time fee. You own this for life. You own all of this content. You're going to get the indicator suite, the scanner set, the PAP course, the guides, the cheat sheets, all for a very low one-time fee of $397. You have direct access to me through email, not for the first 10 days, 30 days, 60 days, 365 days. As long as I'm around and kicking, you can email me at any time with any questions or concerns that you have. I'll put that into the chat box for you, seasonalswingtrader.com/pro is the offer link. seasonalswingtrader.com/pro. I'm going to answer all of your questions. One thing I like to cover here, though, because I get asked so often, is Silas, how do you trade these setups? The easy answer is that it all depends on the setup. My overall outlook, whether I want to be shorter term to intermediate to more position based, the risk reward of that particular setup. But I like to trade credit spreads on equities and commodities, commodity options, but I also trade the underlying in both futures and FX on multiple time frames. But what I gotta say that what or how I trade really doesn't matter. And frankly, you should never be concerned with what I'm doing. You have a question or an idea, shoot it to me. I'll answer you all day long. But at the end of the day, you are in control of your own account, how much capital you have, your knowledge, your risk tolerance, and the time you can personally commit. Nobody can tell you or should tell you how you can trade. That's got to be a decision that you can make and that you should be comfortable making. So I like to get that out there, but I am here to help. I really value my students and our community, their feedback. You're going to get any updates that we decide to provide in the future for any of these platforms. So every time we make an update, we usually make it across all platforms whenever we can, assuming it's possible. Some things can't be done on certain platforms. I got a lot of questions here, guys. So thanks for sticking around, hanging out, and your patience. I'm going to answer all these, and yes, we will look at the markets as well. I do like to show you quickly what the members area looks like, because if you're like me, you kind of want to see what you're getting involved with if you don't know already or don't have confidence for whatever reason. So let me show you. All right, so the members area, oops, I don't know what happened there. All right, so here's the members area. You're going to get the TPI indicator for all 5 platforms: Thinkorswim, TradeStation, MT4, MT8, and TradingView. The scanner for TS, NT8, Thinkorswim. All the installation guides right here, very quick, to the point. Installation videos. If you guys are using any of these platforms right now, you probably already know, like the back of your hand, how to install it. But if you're not, we can help you here through these little guides. And my tech support guy, he can follow up in the tomorrow, and he can log into your computer or your system and help install for you. Just please allow him time to set that up and schedule an appointment for that. Price Action Pro course, these are the modules that I talked about. Again, I will stress, and I don't have any problem doing so, if whether or not you use the TPI indicator or the scanner, this alone to me is very valuable. You can take this knowledge in here and you can apply it to any method that you're using. Any of those other methods that I mentioned earlier or something else, I know you probably, a lot of you have been around the block, you bought this, bought that, and that's great. We're all here to continue our education, but using these price action price action basics right here will really, I feel like at least, will help you on your overall path. Here's all of your resources and bonus materials, PDFs, and then the DD Pro Trade Journal. I see somebody asked what that is. It is what it is. It's just a trade journal. It's there for you to keep track of your trades, and it comes as a Excel download. All right, cool. Yeah, we'll do Russell. We did record Russell. If you have a separate question you want to send or ask me, you could email support@seasonalswingtrader.com. Do I incorporate seasonality? Absolutely. It's not my final determination. I mean, I am seasonal swing trader, so yes, I'm always looking at seasonality of every market, whether that's equities, futures, and currencies. But this, you do not necessarily have to incorporate seasonality. One thing that I believe in is confluence. So I want to trade with multiple areas of confluence. I mean, maybe you do, maybe you don't, but at the end of the day, it's about putting odds on our side, in our favor. So what does that mean? What does confluence mean? Let's drill this down and start looking at some markets here. So confluence would mean trading, taking positions or signals in line with seasonality. It might mean trading in conjunction with price action, which is what all of this is right here. This is what all this is, trading in line with price action and in conjunction with the indicator. Those two things create something very, very powerful. Yes, you get access to all 5 platforms. This is not like some special membership area for me. This is exactly what you see. You get immediate access. Yeah, so let's go to the I always like to show the today's action on the the popular markets. So let's take a look at the ES on the 10-minute. So we had a signal here, right here on this 10-minute. We had another one here at the end of the session, right here. And then it looks like we had one appear sometime during this session. Now we go to crude, another market. I'm showing you markets that I like on an intraday basis. So we had nothing on crude today. We go to 30-year bonds. So we had a sell here pre-New York, was at 67.12 down to 07, and we had sell signals coming in right here. How do I use trend line analysis? Very simple. Trend line analysis. This is more support, but it's considered to be a trend line. Go to like the 5-minute. That's what I say for those that like intraday trading. If you're not getting, say, enough signals for your own particular liking, you can always go down to the lower time frames. So if we go down, we go to the 5-minute today on bonds. We had a buy here, pop. We had sells, and then nice continuation. Good question. How do I determine profit objectives and stop? Well, we talked about that in the presentation. If we're getting short up here, where's the next area or the valley that we talked about? Area price structure. It's going to be right here, right? So we're looking for a move down from 14 down to 8. It's 6 ticks. 6 ticks in the bonds. $187. Our risk is going up here somewhere. Now, if you're looking for more elongated targets on an intraday time frame, you may not get them because we're only, we're trying to be in and out if we're day trading or intraday trading. Gold. Let's see what we had. So we had 5 o'clock, 5 a.m.-ish sell signal here, buy signal, sell signal, and then we had a buy signal that, depending on where you got in or out, was a likely stop out there. That was an afternoon trade. 1 hour gold. 1 hour and 4 hour charts work really well if you trade futures or FX. So we had, let's look at our last batch of trades here. We had a sell. This is not as common seeing a buy sell here, but we did get a buy, quickly followed up by a sell, and then traded to the downside. We have nothing right now going on. The fangs, this is something that got brought up in another session. I was pretty pleased to see it, is looking at fang stocks on the 1 hour. Been performing quite well. People buying straight calls, straight puts, or selling weekly options on those. Let's look at, this is Apple. Let's look at Facebook. So we had a buy, which was a loser. We had a nice buy here, nice sell here going into earnings. Google had some sells. We had a buy here, sells coming in here, buys here, buyers right here. 1825 up to 2096. No, this is not repaying. Netflix. So we had a buy here. So yeah, I mean, if you're buying calls, depending on your delta, you may or may not be favorable, may not be in a loss. You're selling put credit spreads. You're making bank there. Tilray. So it's on hourly. Let's go to a daily. Tilray. Does anybody know what's going on here? Is this part of the whole Reddit squeeze? Yeah, we'll look at AMC and GameStop. So we had a buy there. Looks like that was really the only trade we had. Let's say GameStop. I personally not touching these stocks. So let's see, we've got some signals. This chart is so skewed because of the movement. Let's bring this up. That didn't help. Let's see. There we go. All right, let's drag this up. So along the way, we had a little sell, we had a little sell, we had a little sell. The reason we're not getting any buys is because we're not making lower lows. See, low, higher low, higher low, higher low. If any of these little swing lows would have been lower, made a new swing low, we would have likely got a nice little pop there, right? So maybe somebody knew something there that we did, but that's GameStop. CBOE. This is a daily chart. We got buys, we got sells. So a way that I trade, yeah, I'll look at a couple currency pairs here. This is the yen on a 4 hour. So the way that I'll trade these are, I'll do kind of a top-down analysis. Is like, let's see here if we can get, and this goes in a little bit further than what we need to talk about today. You're going to see all of this in the right here in this Price Action Pro course. But what I'm looking for is to trade in line with the higher time frame trends. So I'll start depending on the time frame. I'll go monthly, weekly, daily, and look at for entries on the 4 hour. If you don't want to go that high, you could look at daily 4 hour, daily 4 hour, 1 hour, or 4 hour, 1 hour, or 1 hour, 10 minute. You just need to determine what fits your trading style or the time frame that you can commit. But that's basically my approach. I wait for price action to get to levels that I have identified, and then get my divergence signals on the lower time frames. That lower time frame could be a daily, could be a 4 hour, could be an hourly, could be a 10 minute. But I want it to, it's about putting probabilities in our favor. Yeah, you can use it as trade binaries. Do not offer PayPal on the order form, but you can email me and we can send you a direct link. We'll consider wealth charts. I know Rob well. I just haven't talked to him about this particular indicator. So that's something that get enough interest there. We'll definitely take that into consideration. I'm sure it would work on a 987 or 610 tick. I'll actually make a note right this very second, and maybe I'll test that out tomorrow. And if you don't mind, I know who you are, so we've talked before. And so if you want to email me just to kind of put that there, I'll be happy to look at some markets for you and show you the results there. Trader 68, no scanner for MT4. As far as future plans go right there, I would love it. I would love if the scanner was available for MT4, but just doesn't exist to my knowledge. I work with some very competent programmers, and to my knowledge, it can't be done, but I have not given up. We'll keep pressing and we'll see what can happen. And if and when that does happen, you'll send out a little email and say, hey, we've got the scanner now available for MT4, and it's included as part of the package. I appreciate Josh. Do not trade the Nikkei. No, not trade the Nikkei. Do you trade the Nikkei futures? Let's see, DPZ. I am actually looking to get long in our seasonal service. So here we have dominoes. Let's look at our last signals. So we do have a buy signal. Got earnings coming up. Very just simple eyeball analysis right now. Trend line break at price structure, price support. We had that again right here rather. I had a buy here. We had a sell here. We had a sell here. We had a sell here. I mean, doesn't take too much analysis or thought. So there's DPZ, Delta Peter Zebra, wherever the military code is. Euro odd. On the old Forex. All right. So the last few signals here on the Euro odd, we had a buy here. We had a sell here into monthly and weekly zones. We had a buy here into weekly zones. We go to the 4-hour. We have a buy signal, and I'm looking for a trend line break. Trend line break. That'll probably actually probably make that right there, but I'll leave that right there. Let's just go to 1 hour. Go to 1 hour and see what's cooking on the 1 hour. We had a little buy, we had a sell, and that's where we're at. BIIB. So nothing on the daily. Good night. So nothing since last April. We had a sell here, very clear trend line break. By that time though, that was a gap. Probably would have avoided that. Let's go to weekly. So we had sells here. Notice that sell signal was on a bar before we got a huge drop. We had a buy signal on this. This is a weekly bar. So weekly bar. So 246 up to 280. Longer term, we may push up into this area right here, but this is a good first. This is a good first target on the weekly, because this is the area that causes to take out the swing lows. So that's a good first target. You're only risking, you know, I don't know, 10 bucks to make at least 20. I don't know what the exact risk reward there is, but at least 2 to 1. Support resistance areas do not come in with as part of the programming, because it's a little bit, I guess, subjective, but I try to make it less subjective or not subjective. It's all, price action is always going to be subjective, but when you use very simple, straightforward analysis, I'm not a complex guy. Hey, I'm from Alabama, you know, what can you say? So I like to keep things simple, especially when it comes to trading. What we are doing though, Andrew, good question, is we are working on an enhancement to the indicator that when you do get an arrow, divergent TPI buy or TPI sell, you're going to get price levels. So let's say that we get a let's just look at it right here. So we get our arrow print, we get a price level that would be our stop, that would be displayed. It's just a visual reference is all it is. And remember, and what we talked about last hour is your stop level would be above the swing high, but we don't just put it just like at the swing high or a tick above the swing high. We give a little bit of a buffer, and that buffer, look at this right here. It came right up, took that out. Not saying you'd still be short, but anyway, that buffer would be a factor of the ATR. So your average true range, and you'd be able to put in a multiplier there, 2-time multiplier, 3-time multiplier, and that will carry over on the different time frames and different instruments that you're looking at, because the ATR is going to be different from every instrument. So instead of just saying short here, stop, you know, the high plus a tick or a penny or a dollar, which is fine. Whatever buffer there meets your risk objective, it's going to be based off the ATR. So we'll say 1.5 times AT. It's going to be a high tick with a 1.5 time multiplier or 2-time multiplier, and then target levels are going to be a look back of the last swing low, and then the second target would be the second swing low. That's still the part that's, I mean, it makes sense in my head, but it's a little bit more hard to program. You know, say let's just get to something that doesn't have this large candle. So like on this one here, if we got short, the first swing low would be probably right here. Just depends on how the program reads it. Or here's a good example. This long right here, what's the previous swing high? Right here, 115. So we get long at 103, target's 115. Our risk would be some type of multiplier of the ATR down here, if that makes sense. All right, thanks, Mark. Appreciate it. Have a good evening. let's see, TWST, wait, what is that? Sorry, TWST. That's what she said? Or is that a ticker? Twist Bioscience. All right, never heard of it. We had a little trend line break and a sell. Doesn't look big, but let's see what it went. 90, was this 90 down to 75. Here's another one right at earnings. Here is another one and another one, sell, and another one right here. So I will say that when we have a steeper looking trend, such as what we've seen in a lot of the indices and a lot of stocks, you know, when you get a little bit vertical, your risk to reward, your risk reward is okay, but the validity of the signal is not as strong. Like when we get vertical, boom, 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 those are trades that you need to be a little bit cautious of trying to fade. When you start getting the deeper valleys and dips between the swings, and then when you're getting large pushes up and, you know, pushes higher or large pushes down, you need to be able to determine if that move is looking tired. So when we hit, and this is where the importance of drawing these structure levels, these price levels, it's just pure price action. So when we get down to these levels or get up to these levels, does it look like we're getting tired there? Are the bars getting smaller? Are we starting? Did we stop just, you know, going straight up like stairs? Are we kind of not necessarily rolling over, but are the bars getting smaller? All that indicates is that whoever's in control, it's likely weakening. We could get ready for a reversal, and that's kind of a whole nother ball of wax. But that's how I'll play strong trending moves, because when we go straight up, your signals aren't going to be as reliable, and that's when we're talking about confluence. You know, go back. Are we trading into multi-week highs, monthly highs, all-time highs? What is the price action telling you? What are our signals telling us? There's a bit more to it in that way, but the best thing to do is to trade with the trend, trade on those pullbacks. You still get nice pattern divergence signals and patterns on the pullbacks. And when I say pullback, either pull back into a buy area or pull up or pull back into a sell area. Are the ones you have on first program mathematical? I'm not sure what that means. 5-minute RTY. Let's look at the old Russie. 5 minutes. So we had nothing today. That was our last signal. European session. Let's go back and see what we had before that. Aftermarket. Got trends. Got it a little early, but it pretty much called that top there. That may have been a small loser there. Let's see, another, depending on how quick you're scalping, maybe another small loser. There was a good buy. I don't know if that's what you're looking for there. Yeah, so the price targets that we're working on aren't necessarily mathematical. It's kind of keeping the price action principle in place. Is going back and looking for the last swing high or swing low for target one, and then the last swing high, then the prior swing high, or two swing highs, two swing lows beyond that. So it's tricky because the way you define a swing high or swing low may be different, from somebody else, but we're trying to make it, fairly clear, and there will still be some subjectivity, I guess, in that based on the program, depending on how everybody's looking at it or what their quote unquote definition is. But it's really looking at the more obvious swing high, swing low pivot points. All right, guys, I think we're going to wrap it up. We're about 30 minutes past. I think I answered everybody's questions. If I didn't, yeah, you're welcome, Laura. Always good chatting with you. Glad to see you. I hope you're doing well. Thanks to everybody that's joined. I think I do not know how many spots we have available, but this offer link is seasonalswingtrader.com/pro. If you have any issues, questions, you can email me at support@seasonalswingtrader.com. And what I'm going to do is I'll put that into the chat because there's always somebody looking for that. Support@seasonalswingtrader.com, and boom, there you go in the chat. So I think that's what we'll call it a wrap tonight. Good luck out there, everybody. Great chatting with you. Hey man, I love this. I love this stuff. I love what we're doing, what I'm doing here with this indicator, the price action course, and how it all comes in line together for very high probability setups. So yep, if you suck at technology, my support guy can help you. Just email us and let us know you need help. He'll schedule a remote session. He can log into your computer and get you all fixed up. Yep, you can load on multiple computers, and you can load on multiple platforms all at the same time. I really appreciate those comments. Awesome job, Laurel. All right, guys, y'all take care. It's good to have you. Thank you for your attention, and I hope you learned something. If not, let me know why or which feedback. I always take that into consideration, and wish you the best in your trading. Stay safe, and we'll see you on the flip side. Have a good day.